Hello, good afternoon. You're watching Closing Trades on ET now. I'm Anisha Jain, with me Saisha Faridi, and clearly there's a lot of pressure that the market is dealing with right now. The Nifty is 400 points off the highest point of the trading session. You have the Bank Nifty, which is bleeding by as much as 800 points from the highs, and the mid cap too is pretty much under pressure. So there's no outperformance which is visible there, and a lot of pressure. So when the Nifty is below the mark of 22,400, Bank Nifty, Sensex all under pressure. India Wix, that's the only one which has been spiking very strongly. It's above the mark of 15 now, an 11 to 12% spike coming in on India Wix on an intraday basis. You can't really blame the weekly options expiry anymore, or the fact that there's a phase of polling underway, or that there are big earnings lined up. No, that's not the case. Yes, we are waiting for the outcome of the elections, which is 1 month down the line, but India Wix seems to be factoring something else, and clearly the volatility is something which is keeping both the bulls and bears on their toes. What's also keeping us on the toes is the kind of move that we're seeing in Reliance Industries. I'm not sure of the reason, but that stock is down over 3%, and that alone is dragging the index by as much as 70 points. We should bring up all of those data points as well, because that's a stock to watch out for. Now seeing a cut of almost 3%. So clearly, Aisha, it's not stemming from any global move as such. It's not stemming from any additional worry on earnings, but I'm not sure. But there is definitely something that the street is sensing.
Yeah, it's almost like it's become a pattern, right? That the minute the Nifty does hit an intraday high, it has to cool off and close in the red that day. But yeah, today, of course, it's really stark and sharp, the weakness. I mean, at a time when the global markets, Europe in particular, has started off mildly higher. Asia didn't have a bad day. The US handover wasn't bad. I wonder what really is the reason why you're seeing that over 200-point decline. More importantly, look at US futures. They are holding up absolutely okay. It's a 270-point uptick that you're seeing on the Dow futures right now. Nasdaq, which closed in with a 1.5% gain in yesterday's trading session, that also is holding higher by over 100 points. So we seem to be, in that sense, a standalone case. Falling under our own weight. Anisha was flagging off blue chips like Reliance, L&T. They're the biggest contributor to the fall in the indexes right now. Bharti has tanked about almost 3%. Maruti, Tata Motors, Adani Ports, ITC, Kotak Bank seeing a further decline. HDFC Bank, Axis, SBI, it's all getting fairly heated out there. Even for the broader end of the market, in fact, I mean, as I speak, barring cap goods and cement, and that too by just a negligible margin, all sectoral indexes are in the red. Coforge hasn't resurrected from that opening gap down after its numbers, and that acquisition 9.5% lower still. MRF, I don't recall the last time MRF was down about over 5%. That's really falling a fair bit. ABFRL as well, 5% lower. GMR Infra, SRF. Kunal, smacks of panic, right?
Yeah, not panic as such, but I think there's a sudden adjustment towards risk from the markets. There's something which the markets are trying to factor into, whether it's elections or a sudden adjustment towards elections. That's difficult to comprehend as of now. But the only factor now I think one should be looking out for is a cool off in the India VIX, because, so look at this way, this is the 5th or the 6th consecutive day of rise for the index. We have risen from I think 10.5 on the VIX towards 15.2, 15.25 approximately, where we made a high today. So if we cool off below the 14 mark, then the markets would probably get back into a normal trading zone, and this could probably be called as a one-off correction for the indices. But if we sustain about that 15 mark, say for the next couple of days, then the markets and the choppiness could probably bring the indices back on the lower side. As of now, we are still trading above the key or the critical short-term support for the Nifty. That's around 22,250 on the Nifty spot levels. So there's this very slight buffer which the markets are now trading with, which initially was more than 2.5 to 3% for the index, is now slimmed down to just 0.5% or so.
Okay, that's the point coming in, and of course India Wix is that important factor to watch out for now rather than the Nifty levels. So see, Rudramurthy, similar question to you on the markets, but also talk to us about Reliance Industries. That stock is down almost 3%, quite a bit of drag on the markets. Do you see any recovery in sight for Reliance, any level which should be a very strong floor?
See, for me specifically, 2,800, 830 holds a very strong support to Reliance, and use this as an opportunity to buy. Yes, there are rumors on street that yes, taxation changes can happen and all capital gains which are now taxed at 10% for LTCG and short-term capital gains at 15% can become normal rate. And this has been one of the reason why markets are taking this rumor and falling. But I feel all this will happen generally before the budget, and generally these stocks will come and go, and use this as a great opportunity to buy into good stocks. So for me, Nifty is also underperforming compared to Bank Nifty again because of Reliance. And this is an opportunity definitely to buy into good stocks. For example, look at PSU banks. For me, SBI at current levels of around 815, 820 is a great buy. Look at Canara Bank as a good buying opportunity at current level. And you have a lot of good stocks to buy. Use this dip as a good buying opportunity. I am bullish on market, and this dip has to be used as buying opportunity.
Use the dip as a buying opportunity. Let's take that conversation forward. Shibani Sarkar as well joins in on the show right now. Shibani, hi, afternoon. Par for the course, I guess, Shibani. I mean, I don't know what could be the particular reason that what could attribute this kind of a fall in the market to, and a sudden one at that. We seem to be the only standalone case amongst all of our global peers. But that said, you think some more correction and could be a great, buying opportunity?
Yeah, so our markets have performed extremely well in the overall context of the emerging markets. And clearly, from that perspective, India has been a standout. My view is that the ingredients that you've seen, which have driven markets so far, are still fairly intact. We are in the midst of our earnings season. And so far, what we have seen in terms of corporate earnings delivery has been pretty much in line with expectations, with most of the sectors and stocks that have reported numbers so far, by and large, have been in line with estimates. So after a long period of time, we've seen that over the last few quarters, earnings upgrades and downgrades have been pretty much in a very, very narrow band. So earnings have been steady. Flows continue to be strong, especially on the domestic side, and that is also helping. Of course, when markets outperform in a big way, especially in the context of emerging markets and China, we do expect some degree of volatility. What we continue to believe is that if you look at valuations for the market, specifically the Nifty, while if you look at long-term historic average multiples, current multiples are slightly above history, but it also coincides with earnings growth, which continues to remain strong. So our belief is that large caps, specifically if you look at the Nifty in terms of valuations on a one-year forward earnings basis, valuations are slightly above history, but earnings are supportive, and therefore it is not extremely stretched. Within the mid and small cap baskets, one has to be stock specific and look at segments where valuations and earnings are in your favor. If you look at history, clearly mid and small caps continue to trade at multiples which are significantly higher than what average valuations are. So our belief is that from an overall market perspective, earnings, flows, and macro parameters continue to remain fairly in check. And therefore, if you look at some degree of volatility, given the past performance, it's something that is part and parcel of markets.
That's a take coming in on the markets. Yes, earnings have been supportive, but don't you think, Shibani, that most of it is priced in? Because I mean, even if you look at this earnings season, there's hardly been a surprise coming in, barring a couple of names perhaps. If at all, which sectors do you think which might surprise on the upside or are poised for an upgrade from here on?
So absolutely. So if you look at what's happened so far in FY24, earnings estimates at the beginning of the year and where we have ended up, the deviation has been hardly a few percentage points. So you're right that earnings delivery has been pretty much in line with estimates. However, when you look at our earnings as well as our return ratio profile in the context of emerging markets, we clearly continue to stand out. And therefore, from a relative basis, we believe that ROE profile of Indian markets as well as earnings profile continues to remain fairly healthy. In terms of sectors and delivery, what we have seen so far, where there have been earnings ahead of estimates, a few sectors do come to mind. One, cement earnings delivery from the companies that have reported numbers so far have been slightly ahead of estimates. Autos, which have delivered numbers, and even on the auto ag space, the numbers have been fairly healthy and maybe slightly ahead of estimates. Now, if you look at the earnings season so far, of course, the bulk of earnings so far has just still come in from the BFSI space and technology. Technology, as expected, was a muted quarter. But even in the BFSI space, I think one standout for me has been that contrary to fears of continued sharp decline in net interest margin for banks, margins have held up fairly steady. Banks are now seeing better deposit trajectory, which means that the liability franchise is also improving, and that bodes well from a balance sheet perspective. So while overall, yes, earnings have been in line with estimates, but I think continued delivery of mid to high teens earnings growth for the next 2 years bodes well for the market.
It's Reliance, L&T, Bharti, they're the ones which are weighing heavy on the indexes. I don't know if we can bring up that contribution plate or not, but clearly Reliance, L&T falling over 3%, bound to be they are the biggest laggards. Maruti as well has fallen another 2.5%. The Adani names as well falling. Kotak Bank has ebbed off a little bit more. It's down nearly 1.6% or so. Asian Paints, IndusInd Bank. These are stocks which are weighing heavy on the indexes as we speak. What is Bajaj Finance up to, considering, that started off with a gap up, and unfortunate as it may be, on a day when you started off with, such high single-digit gains in Bajaj Finance, it's completely petered down from the start to the finish, and a very gradual decline at that, much unlike what the markets have done. It's now up 1.6% up in the green. But Kunal, what about Bajaj Finance next? What do you see on the charts? Unfortunate that it didn't hold on to the morning gains.
Yeah, I think that's the right objective for the stock. It was coming closer to a breakout in the initial, first 15 minutes, half an hour or so, when the stock was coming closer to that 7,400, 7,500 mark. This is actually now a triple resistance for Bajaj Finance. So in the last 1 month, the stock had tried to scale past about the 7,500 mark, failed to do it. In the previous attempt, the stock made a low of 6,700 approximately. So which means on the way down, if the stock doesn't break below the 6,700 mark, then we could probably expect that gradually the stock would make an attempt again towards 7,500 mark and break above those levels. But if we break below the 6,700 mark, I would believe that we could probably be expecting a much more sharper correction into the stock price. So as of now, no trades on the stock, but I think we'll wait out for a point where the stock either makes an attempt towards the breakout of the resistance or the support.
Okay, so let's see which side Bajaj Finance goes from here on. Quickly marking a few more names, it's Hindustan Zinc, which is holding up quite okay with a 6% gain. Remember, the interim dividend is what the street is waiting for. They have announced the date as May 7th for consideration of that. So watching out for that. Blue Dart, I think it's a result reaction coming in. Yes, so that stock is up 9%. Ajanta Pharma is up 8% as well. The buyback, FY25 guidance. Piramal Pharma ahead of its earnings is quite excited. Let's take a look at what Godrej Properties is up to, because while the earnings were okay, in line with expectations, maybe a mild beat on the margins, the guidance continues to be quite strong for the coming year. They're guiding for 27,000 worth of booking value, and that comes on an already heavy base of 22,000 crores. So that's the other stock in focus. We'll track that and a lot more, but after this short breather.
Back with the closing trades right here in 80 now, and still drifting lower, although we're definitely off from the session lows. We were still a good 200 points lower for the Nifty futures, and to think of it, to start off trade today, we were almost closing in on that 22,900 print at one point in time. 22,573 on the futures as we speak right now. It's the usual suspects now. It's L&T, which is the top laggard on the index. Reliance continues to drift lower. Maruti, Bharti has seen a smidge of a recovery. IndusInd Bank, Kotak, ITC, etc. They continue to drag as we speak right now. Coal India, though, is holding out very smartly. DRL is looking good. Bajaj Finance, even though it's given up a major chunk of its gains, but still drifting in the green. And ONGC is still holding out as we speak. Flattened out now for M&M, for Eicher, ICICI Bank, SBI. They perhaps are the more resilient ones amidst the rest of the banking pack, as also has been the case with some of the energy as well as power plays, and the entire infrastructure theme as well. So take a look at NMDC, take a look at what's happening with Shree Cement. BHEL is a big mover. We've seen some of the power financiers like PFC, REC shoot up quite a fair bit in the last two trading sessions. And then I want to check in on what Dabur as well as Britannia is up to ahead of its numbers later today post-market hours. Dabur, after them talking about the fact that now it's their rural growth which has actually overtaken urban, and from a minus 5% figure, they're now at 6% plus. So that's still resilient today after that over 4% move that the stock saw in yesterday's trading session. Shivani, do you believe that, we're yet to hear from a Britannia, Unilever, etc., but just going prima facie by Dabur's reading, the green shoots pretty much are there, and maybe this is the pocket to bet in on?
So I think for the entire consumer FMCG segment, what we have seen in terms of that K-shaped recovery, where premium continues to be ahead of mass, still is what is playing through. However, at the margin, when you look at data maybe does suggest that there are some initial green shoots of recovery coming through. However, it is not likely to be a very sharp recovery. It's going to be more likely a very slow and steady recovery. A few data points that we have been tracking here, apart from the commentary that's coming through from some of the companies that are reporting numbers. One is that the expectation is that this year will be a normal monsoon year. And that means that going into the second half of the year, if the Kharif output is good, we will possibly see some recovery take place where rural income is concerned. If you look at the data in terms of real rural wages over the last 4 5 years, the number has been largely flat. And therefore, that is clearly what has impacted mass consumption, whether it be in various categories and segments that you're talking about. The second factor is that we are tracking is the demand for Manrega jobs, and that demand seems to have come off somewhat. The third factor is that infrastructure related activity would likely pick up post the elections, which means again job creation, where the entire segment is concerned on the infrastructure, should also help support wages, especially at the lower end segments and rural wages. So all these data sets seem to point that maybe we are at the bottom. Whether we have recovered or whether there is a sharp recovery that is underway, the answer is still no. But we would expect that going into the second half of the year, you should start seeing some green shoots of recovery where mass consumption and FMCG goes.
Point taken, but since we're talking about FMCG, let me bring on board Vinny. She'll join us to talk to us about the earnings expectation from Titan and Britannia. Titan, of course, will come within the course of next 1 hour, I believe, while Britannia will be a little later. Vinny, why don't you first begin with Titan and then we can discuss Britannia too?
So yes, in terms of the jewelry retailer Titan, we are expecting around 11% growth in terms of revenues, profits 8.2% growth, while margins expected to see a slight bit of an expansion of 11.4%. But what's key and what we'll watch out for is also in terms of gold prices. How is that shaping up? Any impact in terms of demand there? Because we saw a sharp rise in terms of the gold prices. So yes, expecting a high double-digit growth in terms of value, mainly, and this is despite the gold prices so far. So that's interesting to watch out for in terms of commentary. Margins expect to see a slight bit of a marginal growth, and this is mainly due to the increased salience that we're seeing of the low margin gold jewelry, and other than that, jewelry EBIT margin that could be a bit subdued. That's what we're watching out for. New growth engines are key factors to watch out for. Carrot Lane, especially in terms of how is the growth there, as well as volumes that are likely to be a bit of an impact that we could see going forward in terms of a commentary that we're keeping an eye out on. Though in terms of Q4 update, they've said jewelry business will see a 19% growth, which accounts to around 80% of their business. Watches expected to see a 7% growth. And overall, the company said the overall revenue growth is also expected to be strong, and 86 stores is what is there that they were added during this quarter. So key factors to watch out for in terms of that is the demand trend outlook, gold price outlook, as well as sustainability in terms of volume growth, and new growth engines, how are they performing, are key factors to watch out for. So yes, in terms of the biscuit maker Britannia, we're expecting around 3% growth in terms of the revenues of the company. Profits are expected to be subdued, while in terms of the operational performance also, we're expecting a bit of a subduedness and a contraction of around 100 basis points in terms of the margins of the company. Now yes, what is impacting the gross margins of the company, the EBITDA margins of the company, is that gross margins mainly because of price cuts, higher grammage offset. That is something that is offsetting the impact of the softer commodity prices. So let's keep an eye out on the margins factor specifically, and commentary that will come in terms of the raw material prices as well as in terms of margin outlook. Also, let's not forget that margin decline this time, and EBITDA margin decline, is because last year there was a bit of a one-off that we had seen in terms of the PLI benefit they had received. So yes, because of that we're seeing an EBITDA margin decline. Volume growth is expected to come in at 5%, so watching out for that. Keep an eye out in terms of commentary on rural, the Hind belt, how is that doing, domestic market share, what are the trends there, competition from the local players and regional players as a key factor to watch out for, and obviously commodity prices, like I mentioned before as well. Any commentary on that is something we're watching out for.
Well, not just that, but the big one, of course, is going to be tomorrow when Kotak Bank reports its numbers. I think more than the earnings, the street would like to know, what is going to happen with the senior leadership now. So let me take it across to Gaurav and find out what the street is anticipating.
Well, yes, talking about Kotak Mahindra Bank, now the stock is at 52 weeks low level. And if you look at the numbers now, if you look at the street's expectation, they're expecting healthy set of numbers coming up from Kotak Mahindra Bank for Q4. So net interest income is expected to increase almost by 9%. If you look at PPOP, now the street is expecting the increase of almost 6% in PPOP. Apart from that, if you look at profitability, now brokerages are somewhere expecting profitability to go down almost by 2.6% on a YY basis. But sequentially, they're expecting provisions to go down. And that could be a reason why they're expecting profitability to go up almost by 13.5% on a sequential basis. Apart from that, if you look at net interest margins, now they're expecting net interest margin to go down almost by 5 bips on a quarter-on-quarter basis, and it may remain somewhere in the range of 3.15%. And apart from that, if you look at advances and deposits, now they're expecting a strong growth there as well. So the advances, they're expecting it to increase almost by 17%, while we may see deposits also growing at the same level, around 17% on a YY basis. But the main factor in this result is not going to be numbers. This is going to be commentary from the management. So we've already seen that Kotak Mahindra Bank has faced some of the bans from RBI. So for example, RBI has now banned the bank from onboarding new customers. At the same time, they have also banned banks from issuing new credit cards. And we also saw a key management exiting. So MD, Mr. KVS Manian, recently exited the Kotak Mahindra Bank board. And on back of this, we will definitely watch out for how the commentary comes up in terms of growth trajectory and how they are going to deal with the RBI's ban and how we may see the trajectory coming up for credit cards. So all in all, good set of numbers are expected from Kotak Mahindra Bank. But apart from that, definitely watching out on how the commentary is coming up from the management.
Is something that you need to watch out for Kotak Mahindra Bank apart from the earnings. Thanks, Gaurav, for that. But JSW Infrastructure, just wanted to bring that stock on board because the earnings are just out. They look quite healthy. I'm talking about JSW Infrastructure, and they've come out with a guidance as well, wherein they're talking about that they're looking at increasing their cargo handling capacity by almost 2.5x by FY30. They're actively pursuing and exploring various project development opportunities leading to a robust project pipeline. So that's the latest commentary coming in from JSW Infrastructure. But talking about logistics, Shivani, the stocks haven't done much. I mean, Adani Ports, of course, the business seems very strong, but the stock hasn't done much after that entire fiasco and the recovery post that. JSW Infrastructure, even other logistics names the likes of Blue Dart, etc. What's your view in terms of investable ideas within that space?
So this is a space we are fairly positive on. We believe that if you look at the overall growth of the economy, the sector is very, very closely correlated to the growth, and our expectation is that economy would continue to grow from here on. In terms of the overall infrastructure, specifically with the kind of investments that have been made in terms of building roads, as well as even in terms of the DFC getting commissioned, overall sector should start seeing improvement in terms of growth. Yes, so far we have seen muted numbers that have come through, but expectations remain that from here on, as the economic growth continues, this is a sector where we believe that the numbers should start to come through, especially where volume growth is concerned. On the export side, we've seen that there has been some amount of impact because of global slowdown. However, incrementally, as things start to kind of settle down there, we should also start seeing improvement overall. So this is a segment and a sector where we believe that on a stock specific basis, there could be opportunities that can be examined.
Right. Okay, Shivani, always good to have you on the show. We'll let you go on that note. In fact, halfway mark, or rather half an hour to go before we wind up for the week. Let me quickly take it back to our charters and get in some closing trades as well. Rudramurthy, what's on your list?
See, positionally, I'm having two buy calls on PSU Bank. First of all, SBI looks very, very strong to me, and use this dip to buy State Bank of India. I'm looking at targets, positional target of around 880 to come on SBI, and eventually a 4-digit number of 1000 to come. Keep a tight stop loss of 790 on a closing basis and go long on SBI. For me, even Canara Bank looks very, very strong on chart, and it has given a clear breakout now above levels of around 810. So I will be a buyer in around 610. So I'll be a buyer in Canara Bank, looking at targets of 670 with a stop loss of 600. So a buy on SBI and on Canara Bank.
A buy on SBI, a buy on Canara Bank. Kunal, what's your list like?
So I'll go with a differentiated name, Oracle Financial Services. That's a stock which is forming a bullish hammer pattern last week. This week so far, the stock has done pretty well. It's come back to that 7,400, 500 plus range. So would suggest a buy on the stock.
Okay, a bullish hammer pattern for OFSS, and that's the view coming in from Kunal. But as we slip into the short break, listen into the commentary coming in from the Coforge management, because that stock has not seen any buying on dips. In fact, it's gone lower from there because of course, the overall Q4 numbers were a bit weak on the margin front. The street is worried that the company has not given any FY25 guidance, and the fact that the acquisition might change the overall targets, the target multiple of the company, and the way of cuts that we have seen from the brokerages makes the street worried. In fact, Jefferies has double downgraded the counter and the target prices have been cut sharply. But the management is fairly confident and saying that the deal is going to be EPS accretive from day one.
On margins, we've given a clear guidance. Our margins will go up 50 bips next year. And we've also given a very clear statement of intent that FY27, we do plan to be, post the Signity acquisition, to be a $2 billion USD firm, operating at a margin which is 150 to 250 bips higher than the FY24 margins. It will be EPS accretive from day one and therefore year one. Absolutely.
Well, back with closing trades right here on ET now. Recovered a little bit from the session lows, but we're still down 0.7% or so. 22.47, 470 is where we're currently at. But since we're stepping into the weekend and it is a gloomy market, so let's pick it up a little bit. On the latest edition of ET Now on the Go, we delved into the vibrant city of Ahmedabad, covering everything from its iconic and long-standing establishment to some of the delectable delicacies as well, along with some insights from market expert and big foodie Vijay Kedia.
And after talking to everyone today in Ahmedabad, what we got to know is that we have to come to Manik Chowk and eat food here. So now, let's talk a little bit about Manik Chowk. A vegetable market, a fruit market in the morning. Afternoon, it's a jewelry market. And in the evening, in the night, you can see for dinner, it's a hustling, bustling food street. Just look at the crowd that you're seeing. Everyone is here just to eat food, and that's what we'll be doing. Eating all the yummy food here on this food street, Manik Chowk, right in the center of Ahmedabad, the old Ahmedabad city. That's what it's there, it is placed, and that's what we're going to be eating a yummy food at. तो आज हम विशाला रेस्टोरेंट में है, थाली रेस्टोरेंट में है और थाली खाना तो जरूरी है। मेरी प्लेट देखे ऑलरेडी भर चुकी है और अच्छी भरी हुई प्लेट के साथ खाने के लिए गाना, खाना और बातें तो चलेगी ही। बातों के लिए आज मेरे साथ जुड़े हैं Vijay Kedia. Vijay Kedia, sir, thank you so much that you have joined us today on the channel to talk to us in Ahmedabad. We have had a lot of, we've traveled around Ahmedabad. Ahmedabad की बात करें तो Vijay sir, what is that one thing that you love in Ahmedabad? Every time you come, what is that one thing that you do?
I love beer.
Gujarati beer.
Gujarati beer.
That is what we're going to start with.
Yes.
Cheers.
Cheers.
Cheers is what we're going to start with.
Yes. This is my favorite drink.
Oh, and it's very nice because it's during summers.
Yes.
It's the best that we are having right now. Chhash is one thing.
मैंने सुना बम्बई में दारू, अहमदाबाद में छाछ, ठीक रहेगी आपकी सांस.
Very important for your health to drink, and especially in this hot weather. Let's enjoy the food and eat more food.
Yes.
There's too much on a plate to finish.
Okay, so that's the yummy food coming in from Gujarat, Ahmedabad, but we have to deal with the markets because it's clearly a lot under pressure right now. Ansh is joining us with the list of the price volume buzzers right now. Ansh?
Right, so Shree Cement will be the first stock in focus as the stock has actually formed three white soldier candlestick pattern. Now this pattern usually indicates a potential reversal in trend on upside. Also you can see in the chart stock was first trading in the downtrend, then in a sideways, and now it seems to be trading in an uptrend. The stock has also surpassed above its 20 and 50 DMA with volumes of over 5 times its average trading volume of last 10 sessions. Apart from this, concerned narrow leg will also be in focus as the stock has actually given a breakout from its cup and handle chart pattern, and it has touched 2-month high level as well. The breakout has been backed by heavy volume of around 10 times its average trading volume of last 10 sessions, indicating very strong participation in today's breakout. Lastly, Piramal Pharma will also be in focus as the stock has actually given a breakout from its rough reverse head and shoulder chart pattern, and it has also touched 1-year high level as well with volume of over 9 times its average trading volume of last 10 sessions. So these are the breakout stocks based on price volume action.
So the breakout stocks are on the price volume action list, but Chakri Lokpriya as well joins in to talk about what he's making of the market right now. Chakri, hi, afternoon. What explains this sudden panic kind of dip in the market?
Indeed, good afternoon. Thanks for having me. Not really sure. I guess it's a round of profit taking, and there also been lots of poll numbers, surveys. So I think all these kinds of news and rumors is what, but otherwise, globally, domestically, there's nothing really negative about the market.
Chakri, lots going on within the banking pack, right? I mean, for Kotak Bank, Mr. Manian stepping down. Tomorrow you've got the earnings as well. And then, of course, you've got Bajaj Finance, where RBI has lifted the ban up now. And they could really clean up their books in just 5.5 odd months. Does that bring in hope for a Kotak, you think? And could Kotak be a better trade right now?
With Kotak, the RBI ban was one. Second, now with Manian leaving the bank, and also after a number of people have left the bank, I guess that will kind of take the management focus a little bit away from operations, and that will kind of impact growth going forward, compounded by the RBI. So, while this Manian story was not known 2-3 days ago, this is now something which will hold back Kotak Bank. I guess similar thing will also hold back Federal Bank. Then and the whole private sector banks are going through some issue or the other. On the other hand, PSU banks are reporting strong earnings.
That's the take coming in on Kotak Mahindra Bank. Just wanted to highlight the latest update coming in on Raymond when the company decided to consolidate the engineering business of Raymond and MPPL to build scale and profitable growth with foray into the sunrise sector such as aerospace, defense and electric vehicle component space, and then segregation of the aerospace and defense business coming in. So a bit of a rejig coming in with the company deciding to perhaps consolidate all the engineering business into one particular company and then segregating it into another one. So that's the latest coming in on Raymond. We are tracking what's happening to that stock. But separately, Chakri, wanted to get a sense from you regarding the entire consumer durable space. And I was just looking at the stock price of Electronics Mart India, which is a retailer of consumer durables, and that's spiking. We saw the numbers coming from Havells as well. Apart from the turnaround in Lloyd's, there was good growth in consumer durable. Blue Star and Voltas both reported good set. What's the outlook here and what's the preferred way to play it?
Consumer durables, I guess, sort of, if you take a couple of different kinds. One is the Voltas and the Blue Star will do well because Voltas was losing market share. There were other big competitors who are coming in. Product innovation was not there. All that is reversing for Voltas and it's coming back. On the other hand, in the same durables, auto sales have been strong. So which means battery companies, Exide, Amara Raja, both market leaders. Amara Raja still trading at a very low valuation. So I think within consumer durables, there are very different types of durables, but they continue to show strong growth.
Okay, that's the take coming in on some of those majors which came by with their numbers. Take a look at what else is happening in the market. While, of course, Reliance and L&T are weighing heavy on the index, outside the index, there's MRF, which is down 5%, ABFRL is down 4.5%, and Oberoi Realty as well has fallen 4% as we speak right now. Similar is the price action along some of the names like an SRF also, which is down 4.25% in the futures. Kunal, since you've been tracking ABFRL closely, A, would a further dip come in? And B, if that comes in, would you be a buyer then?
Yeah, I'll definitely be a buyer in case if there is any kind of a dip. Now, it's very difficult to comprehend whether there will be additional correction into the stock price, because so far the stock has been absolutely formidable, especially after that, I think 2 days or 3 days of bunched up move where the stock moved from 200, 220 levels to almost 270, 275, where the stock made a fresh multi-month, multi-quarter high for itself. So the move is definitely an indicator that the stock has broken past into an uptrending mode. In this wave of correction, the stock should be bought into. Now, the first critical support which the stock is showing on the short-term basis is around the 235 to 240 range, which is still some distance away from the current market price. I don't anticipate a correction towards those kind of levels, but in case if that happens, that could be a very good opportunity to try and buy the stock or maybe add on dips.
Okay, so that's a view coming in on some of these names. But Chakri, also want your view regarding Bajaj Auto. I mean, today, of course, it was the news on account of that Pulsar launch coming in, and we should perhaps play some of those, footage as well, given the fact that it's an upgraded version coming in for Pulsar, which has been, doing well for the company in any case. And the next thing to look forward is, of course, that CNG motorcycle, which is going to be the first in the world on June 18th will be the launch. What's your view on Bajaj Auto? Because the stock has run up already.
Indeed, while the stock has run up, I think that the stock will continue to do well. The company is doing well on all fronts: domestic, exports, new product launches, EVs. The volumes are picking up, the margins are picking up. The stock, while it has run, I think there's still enough order book momentum, as in, volumes pick up the momentum that will continue to keep the stock up. The new product launches, now they have quite a number of launches lined up over the course of this next several months. So I think clearly I would be a buyer of Bajaj Auto.
Bajaj Auto, that's the take coming in from Chakri. But Rudra, where is it that you would place your bets within the two-wheeler pack?
Yes, if I have to pick Bajaj Auto, that is the best among the pack what we have, and looks stronger, and one can definitely look at accumulating this stock on every dip. At current levels, strong support for the stock is at around 8,700 zone. So at current market price of around 9,100, and on any dips to these strong support zones of around 8,700, I will be a buyer. And once this stock makes a move beyond 9,350, which has been the all-time high, next leg of momentum will come up. So as a trader, if you want to catch momentum, wait for 9350 to break. But if you want to accumulate this stock, buy on every dip till the support zones of 8,700.
Okay, so that's the verdict coming in on Bajaj Auto. Looks like there are more bulls rather than bears on that stock for now. Taking a look at some more stocks and what's happening to the various sectors, I think metals is the one which is outperforming, all thanks to the big move that we have seen on Hindustan Zinc, even NMDC. Yesterday, Moil was fairly active. Today, it's a bit skittish, but SAIL, Vedanta, all of these are holding up quite well. Kunal, what's the view on metals? Is it time now to take some profit off given the run-up that we have seen on a YTD basis? If I have it right, the metal index is up 15% with the likes of Vedanta up 60% for the year already.
Yeah, Vedanta is an outlier because, frankly, I was actually expecting SAIL, Tata Steel and all of these names to start picking up pace, going to breakout. Hindustan Copper is something which you highlighted, I think, at 270 odd mark in terms of a potential breakout. That stock has done exceptionally well, almost it hit or it came very close to that 400 odd levels, and from there we've seen a mild correction. Now the good part so far is that not many metal stocks have gone through a very sharp phase of correction. Yes, the correction has been just about some 4-5% odd on a couple of days for these names, and given the way these stocks have risen 30-40% in a very short span of time, that's a very marginal bit of a dip for these names. And in fact, names like Hindustan Zinc, for example, the stock after a rise from 300 to 425 in the previous month went to a mild correction, even retesting the 400 levels and now closer to that 475 mark. So that's the nature of dip which we'll have to try and wait out for in terms of a buying opportunity. I would be still very bullish on many of the metal stocks. I think Hindustan Copper still looks good for at least another 100 points on the upside in the next maybe 3 months, 6 months or so kind of a time period. Would look out for 500 as a potential target for the stock. SAIL is something which looks attractive for a potential target of 195 to 220 kind of a range for itself, and JSW Steel could be the other stock.
Okay. Okay, a bunch of ideas there within the metals pack. Ajanta Pharma, I want to see what that stock is up to. Not just that it posted very strong numbers and it was a big beat, but it's a buyback as well that the board has announced, and that's coming in at a good 24% premium to the current market price. So even in this kind of market where most of the stocks have given up their gains, it's come off a little bit from the top of the day, but still holding on to a good 7% gain. In fact, Sharad is here to tell us more about it.
Well, it's a strong set of numbers coming in for Ajanta Pharma, and the headline numbers beat the EBITDA, revenue, PAT has beaten analyst estimates as well. Importantly, even there has been a strong growth seen in India, EM branded business, and even the US generics segment. Now, importantly, the higher that IPM growth has been coming in because of a greater volume growth supported by new launches, and interestingly, company has also announced a share buyback. Though the size is small, it's almost 0.82% stake of share buyback, but that's coming at a 24% premium to the current market prices. Importantly, the record date for the buyback is set at May 30th. Also, the FY25 guidance is something which is very strong, and Street is expecting a good guidance going ahead forward, and they're expecting the revenue growth to be in low teens, and the branded generic segment that is expected to grow at a mid-teens level. Also for India, the growth expectations would be high single to low double digit, and management is believing that they'll deliver 200 to 300 bips higher than IPM growth rate, which they have started to say. Basically, IPM growth is nothing but the industry rate of growth. So that will actually translate into market share gains for the company going ahead. And the US business is expected to deliver mid to high single digit growth rate as well. And the gross margin and EBITDA margin expected to range in the similar range of 75% and 27% respectively. And overall, they have seen an EBITDA jump of almost 100 basis points on the way of freight rates and the API prices moving, and they're looking to add around 3 to 4% additional MRs, that's roughly 150 to 200 personnel in Asia and the Africa branded names.
Point taken. But Chakri, what's the latest, favorite within the pharma pack, if I can ask you that? Because there have been big buzzes apart from, Ajanta Pharma. Piramal Pharma is waiting by for its earnings. There are a lot of other names which have been doing quite well of late, and the earnings haven't been disappointing, at least the numbers that we've got so far. And come Monday morning, we'll be waiting by for Lupin, etc. as well. Within pharma, what's the pecking order?
Pharma as a space, clearly we're not focused on as much because the growth is kind of okay, but Ajanta Pharma, for example, Cipla, some kind of a product launch, because they have a number of products online. There's one product launch which is expected fairly soon. I think that will provide a catalyst to the company. In all those companies which have branded generics are seeing margin upticks because that is a higher margin business. And right now in the US, you are seeing some kind of a volume uptick in that bit of the business. So against this backdrop, I think, Ajanta Pharma, Cipla is, both of them are well situated. But other than that, as a space, we're not concentrated that much.
That's some of the opportunities within pharma as a space, but let's get in some BTST ideas too. Or Kunal, is it going to be STBT?
No, so far BTST, but I'll stick to two buy calls. But both of them are both of the names are stronger ones in terms of price trends. Exide Industries is something which looks attractive. The stock is still trading with a positive bias. In fact, has made a fresh swing high today, breaking past about the 460 barrier. So would suggest 488 as a target, and stop loss could be kept at 460. And Voltas is something which I've been recommending over the last couple of days with a potential target of 1520. It still looks very attractive, has been a very stable uptrend, and so would suggest a buy with a revised stop loss at 1476, but target remains the same at 1520.
Right. Rudramurthy, what about your BTST ideas?
I'm picking two buy calls. One is McDowell. McDowell looks very, very strong, and in a weak market like today, it is performing on the upside. So in fact, 10 rupees, it has already moved from the levels where I gave a buy call. So we can just shift the target to 1235 zone with a stop loss of 1200, and a buy call on Biocon, looking at targets of 315 with a stop loss of 300.
Okay, point taken. So that's the view coming in on some of these names. But Chakri, what about real estate pack? Whether it's a Sobha or Prestige, DLF, they've all run up quite a bit. Of course, Godrej Properties over this week has given you a buying opportunity of sorts on account of that entire reject. The numbers today looked all right, and they're talking about a guidance for FY25, which is coming in at a heavy base. So they're talking about booking value of 27,000 crores, and this compares to 22,000 crores that they delivered and was a big beat versus their own initial guidance that they started the FY24 year with. Chakri, within the real estate pack, and especially on Godrej properties, what would be your recommendation?
Real estate as a pack, we had like Prestige and Shobha in the past. I think now the whole sector has run up, including Godrej. And, while the beat was there, the order book is there. I think all those expectations were already kind of built into those numbers. And now, if you look at their book valuations, they are trading at a far more premium than they normally do. So I understand the cycle about interest rates and all that. But given this, I think now it's time to take some chips off the table of real estate.
Right, okay. Those are some of the, realty ideas coming in from Chakri right now. But Chakri, the decline in L&T, it's due to report its numbers as well come next week, and I think early itself, and then the move in BHEL today.
Indeed, I think L&T kind of weakness should be bought into. If you look at some of the industrial names, they're all reporting very strong numbers. You look at a company like Skipper, which is again infra, T&D spend, and they've reported the highest revenue ever, highest order book ever, highest EPS growth ever. So things like that. So naturally, L&T should also benefit from this for the very same reasons. And you've seen BHEL, the kind of move it is. And L&T is clearly decently valued, so I would be a buyer of L&T.
Okay, so we'll be a buyer as far as L&T is concerned. That's the view coming in on some of these stock recommendations. Just wrapping up the day in the next 5 minutes and the week as well. And it's been overall a steady week. It's the PSU banking index which actually has managed to outperform quite a bit. Slowly and steadily, we have seen those move come in the PSU banking name. So, Rudramurthy, what will be your pick? I know you talked about SBI, but if I had to ask you about, let's say, mid PSU banks or the small PSU banks, which other names would you recommend as a buy?
Say, I will surely remain only in PSUs, especially in stocks like Union Bank, or even if you have to pick up similar ones. Yes, for me, even Bank of Baroda is another good pick one can look into. So definitely PSU banks will outperform, and you can look at Union Bank, and at current levels, for me, Union Bank is looking very, very attractive. And I expect from current levels another 20% kind of a move in very short term. So buy at current levels of around 150, 155 zone, and look at targets of around 180 to 200. But however, keeping in mind even F&O, I will like Canara Bank. Canara Bank will be my top pick, available in F&O currently at around 630 in futures. One can buy in futures for a target of 670, 680 to come, and keep a tight stop loss of around 610. It's a 1:4 kind of a risk reward at current market price.
Okay, so that's the view coming in on the PSU banking names. So apart from SBI, there are some smaller banks that you might still want to recommend. Chakri, within this earnings season that has gone by, we have seen sharp negative reaction coming in for the earnings that was not liked by the street, whether it's a Coforge, whether it's a lot of other IT companies or banking names as well. Anything that now enters the buying zone for you, or even Kotak Mahindra Bank, for instance?
If you look at what's happened in the case of Coforge, clearly when the company suspended its guidance, the revenue guidance going out in the next year, that kind of put the dampener on the stock. So that's become the key word. One is the outlook for the stocks. If the outlook is fairly good, which is the case with the industrial stocks, I think clearly that's a space which we should continue to buy. Second, if you look at if industrials are doing well, then packaging, films, and all those companies should do well. So when you said about valuations, like for example, companies like Cosmo First, Polyplex, all these companies are packaging companies which have come down quite sharply. Their earnings were weak, but then with the economy picking up and industrial activity picking up, now these are companies which are in the value zone which are looking good to buy.
So Chakri, very quickly before we let you go, if the markets were to correct further, is your shopping list ready? And give us a brief color on what it's like.
It'll be more about buying within the industrials capex space. So companies like Skipper, that we mentioned about, within the industrial space, companies like Timken, Schaeffler, SKF Bearings, then these packaging companies like Cosmo First. These are the companies, I think, the large amount of upside given the earnings are expected to grow north of 30%. That's something which, in common, all these stocks have.
Okay, let's begin winding up for the day then. Chakri, good to have you on the show as always. Thanks for taking the time out and joining in. We're closing in definitely off the session lows, but Kunal, what's it looking like for next week?
So, the good part so far is that the India VIX has cooled off towards 14.7 mark, but we are still not below the 14 level, which means the markets are going into next week with heightened expectations of volatility. So I would probably be on the more cautious side so far on the indices. Not want to initiate any kind of a trade over here, but I think if the India VIX continues to be at 15 plus levels elevated, say start of next week, then we could be even looking at breaking below the critical support of 2250 on the Nifty.
Okay, 200 points lower. That's how we're shutting shop for the futures. 22,570 on closing bell. L&T, the biggest laggard today in the session, about 3% of a cut. You've got Nestle, Reliance as well, Maruti, JSW Steel, Bharti, Asian Paints. They've all been laggards today. Kotak Bank as well fell about 2% or so. And even Bajaj Finance gave up most of its morning gains, although closing in the green, but just about 0.5%, as unfortunate as it may be, very well sub the 7,000 mark. Coal India, that's been the only shining star today with a 5% move, and ONGC for that matter as well. BHEL, NMDC, Shree Cement, PFC have some of the other outperformers from within the broader end of the market. But I guess, Anisha, the list of losers from within the broader end also must be pretty endless and deep.
Yes, it is. Of course, apart from Coforge, which was an earnings reaction, plus the acquisition that didn't go down well with the street, there are likes of Voltam, Transformers, Carborundum, Universal, MRF, which are all result reaction and seeing quite a bit of sell-off in the trading session today. Raymond was not, very happy with the kind of earnings that the stock reported. The Oberoi Realty stock was under pressure. So a few of these names were definitely going home with a bit of a cut. But not just that, for the week as well, we have seen the likes of L&T Tech slip as much as 12%. HCL Tech was down 10-11% for the week gone by. Of course, Coforge has seen a dip of almost 14%. So clearly, IT not being the favorite in the week gone by. BSE also saw quite a bit of sharp cut despite the reversal that has happened with respect to the transaction tax. Nifty Auto managed to hold on quite okay. So it hit the record high level this week, as well as did the Nifty, the mid-cap index and the small-cap index, even though we are materially off highs for the end of the trading session. But with that, we are wrapping up this edition of Closing Trades. From the entire team who put this show together, thank you so much for being with us.
If you like this video, then like, share and subscribe to ET Now.